Yeah, there are limitations individually, and then lifetime gifting limitations when you're gifting it.
Now let's laser focus on the Deferred Sales Trust. So for our listeners who are listening, they know about maybe the CRT, they know about flips. And so we have a thing called a Deferred Sales Trust Plus, where essentially you can move all of, at the sale of an asset, you can move that asset not only into a capital gains tax deferral state, but also simultaneously outside of the taxable estate with the planning. And what my understanding, Michael, is that's going to give not only the estate tax savings, because now it's outside of the taxable estate, but it also does it in a very efficient way. I mean, in one single transaction in one day, you can do that. Now, it needs to be at close of escrow. You need to have a new buyer. It's not like just moving it into something, like moving it to an LLC. It's literally you are selling the asset to the trust, and in combination with the DST Plus, and now we can move it outside the taxable estate, but that entire amount can move out. Is that a fair summary, or would you add to that at all?
Yeah, I think you can take an income option there, and that income option can basically give you an income and take the principal basically out of your estate and making your children the next kind of like the generation skipping.
Got it, right. But there's no limits on the amounts, right? I think that's the key for the family limited partnerships and the gifting. If you're just doing in that order, there's typically per year per amounts, right? Michael, you want to talk about that and then compare that to the Deferred Sales Trust?
Yeah, there are limitations individually, and then lifetime gifting limitations when you're gifting it. But when you're selling something, there are not the limitations that occur. And then the sunsetting provision, like you were saying, is another concern, because in January 2026, it goes from the 11 million limitation. With the COLAs, it might be between 6 and 7 million per person. So those are, at that point, it starts at 35%. And that becomes extremely painful for each dollar that is there. So we're guessing that maybe the sunset provision will just be enacted in January. It's a very difficult, sticky subject for Congress and whoever is the president in November when the election happens, which will be effective in January of 2021. So we're just around the corner to 2026. And these are planning things that people need to be thinking about because assets will grow, planning needs to happen, and your insurability too. What happens if suddenly you're uninsurable on different events?